Ajay, good morning. Thank you for joining us. The news on the medical front is not great. Do you think markets are likely to react the way they did same time last year, or this time the reaction could be a very nuanced one and a very matured one?
As you rightly said, memory serves us right that what you did in the March, depending on if you sold or held, made your fortune or you lost a fortune. So I think that recent memory are pretty alive in most investors' mind. Having said that, I think the caution is coming on in terms of commitment of fresh capital. And I think, when you talked about the health crisis, it's, I think, a very sad litany of where we have reached because it's not just about people. You can keep talking about people being very, stupid about not taking the norms, but look at what's happening to our the whole the election rallies, they are going on as if nothing has happened. The Mahakumbh, I was there in Uttarakhand, was absolute disaster waiting to happen with the kind of people there. So so it's not all us who done it. It's also the leadership signaling. But having said that, caution is warranted. So more than selling, I think its caution is on committing fresh capital and how to do it. And I think the numbers on core industries are very, very sobering, to be honest. They were, much below our expectations last week when it came in negative. And therefore, there is certainly caution that at the end of the day, the government is taxing you much more and giving you a lot less in return. So therefore, net, the wealth of the citizens, at least a large part of citizens of this country, is going to erode in the current year. The top 5% or 2% or one, whatever you call them, are going to make hay no matter which way the market works. But for the bottom 75, 80%, I think there's a problem there in the wealth and the spending patterns.
Okay. What should our viewers do? Sit tight, don't commit any fresh capital, or if there is a big decline, 2, 3, 5% on the Nifty, 6, 7% on the Bank Nifty, put whatever cash you have or whatever dry powder you have, use it.
Well, dry powder has to be used, I think, but first place that have to be used is a metal. Metal is like gold today at the end of the day. No new capacities, severe concentration of capacity, and which is true for most parts of our economy, Nikunj, is that why companies make bumper profit is because they're almost becoming monopolies. 3, 4, 2 companies have control 80% of the market share. There is no way, it doesn't matter where the economy goes, they will make the money. So I think if you want to reallocate, I would go the right way is keep adding up to metals. Every correction, metal is the place to be because that's got a long runway. It's got just a 1 year. They have seen a good time. They're going to see another good time for 5, 6 years. I think that's the place where you want to be. Number 2 is companies with moats. You need to look at specific stories, things like IEX, kind of stories where there is no pure monopoly going on in the system, right? That nobody else can now produce a gas exchange in the country, which is going to be the second largest energy consumer in the world. So I would say rather than committing to Nifty and Bank Nifty, I think this is a time to commit on correction to companies with deep moats because they will give you superior return than just chasing Nifty. Nifty, by and large, even a 20, 30-year perspective, has not given a very attractive return point to points or various points. If you ignore last March to this March, take it last 5 years, 10 years, 15 years, Nifty investment has never paid returns to investors. Investing in companies with moats has paid handsome returns. And I think that's where one should commit more capital and lots of capital because this is a place where you will make maximum returns every correction that gets you opportunity.
Do you see much of an impact on consumption this time, Ajay, given the reimposing of restrictions, possibly a hit on sentiment? Do you see any impact there?
Of course, it's going to impact. Of course, it has to impact. But the bottom line is that impact doesn't really translate up to the stock market to that extent because for the simple reason that lots of the companies who cater to the unorganized sector, whether it's consumer products, whether it's their clothing manufacturers, those don't really add up too much. And what adds up is, of course, the PV manufacturers, they will see less slowdown in terms of traffic, but that will pass through over time. So yes, consumption will slow down at the economy level, but do you see that slowing down for the stock market participants? I doubt very much that's going to happen. So will that impact a Dabur? Perhaps marginally so, but Dabur is also going deep into the rural market. Will that impact Imami? Maybe marginally so. But these are companies with, as I said, they're so deep moats that these minor demand slowdowns only consolidate them further because they got the power, sheer power to command retail presence and therefore get out the marginal players from the market. So the more the slowdown happens, the more these companies are getting stronger, and therefore a stock market should be cognizant of the fact that monopolies are being created in an imperfect market, and therefore they will make superior returns whichever way the economy works. And it has shown to us in the last 5 years, as the economy has struggled to be a 5-6% economy, these companies have given handsome returns of 20% and above. And that's the power of monopoly at this point of time. So consumption slowdown, yes. Will it impact these companies? Perhaps no, they may become stronger.
Okay. The broader markets as well, Ajay, some concern there in the sense that just when we're building up that momentum, finding opportunities, identifying companies, as you mentioned, there's always a little bit more vulnerability when it comes to the broader part of the market. Again, would you agree? Would you stick on to perhaps the safer preferred names, a handful of index names, or would you still wait and watch how things evolve?
There is no point waiting and watching. You couldn't predict in February of 9 with the 9,000 cases, you couldn't predict the COVID will be 1 lakh cases. You can't predict that COVID from 1 lakh will again go back to 9. So I think this guessing game, to my mind, I could be a seer or astrologer, maybe perhaps better job for us at some point. But I think the point, as I said, was again and again, is that people need to have their shopping list very clear. What do they have in their portfolios? Is it a new economy stock? Is it a stock with more? Is it a stock which are the strongest players? Are there monopolies in their portfolio? Because let's take Adani Port. Let's take an example. I'm not recommending for either ways. I have a holding, but not recommending. Now, what can happen to the company? It controls 70-80% of the port traffic in this country. Now, if port traffic goes down, it will have a marginal impact on it. Port traffic goes up, eventually it will have a great positive multiplier to that one. So, when you evaluate that, whether you have a port company, whether you have an IEX equivalent in your portfolios, you really don't look at the current and says, what's going to happen in the next 1 month or 2 months or 3 months. What you got to build up is, do you have those monopolies in your portfolio? Because if you don't have, and you're running after the same cement companies, you're running after the same old, kind of economy companies, I think you'll have a problem in your portfolio at the end of the day. So it's not about timing. I think it's about build up your portfolio with the right companies would be my, the way I look at it. And yes, we'll have ups and downs in the market, which is what is very visible in the market today. There's a lot of kind of weakness. But use that to your advantage, because in next 3 to 5 years, the larger companies of this economy are going to make supernormal returns. I think that's the moral of the story. Economy notwithstanding, they will make supernormal returns. And you saw what happened to steel company fortunes. One government change in tariff, look at the fortune of those companies. It's a different ballgame compared to 2 years back. So bet on the bigger companies. They will be the beneficiaries no matter which way the economy goes.
Sure. So, Ajay, while the market will not react to the same event twice in the same fashion, tactically though, would you say that bet on the usual suspects, the beneficiaries, your IT, pharma, specialty chemicals, etc., and stay away from the opening trade for now, at least your hotels, travel, multiplexes, shopping malls, clothing, retail outlet, QSR, what have you?
Longer term doesn't matter, Nikunj can verify to that one. You can take 5 year, 10 year, 15, 20, whichever number of years you take. Two industries that never made money for investors around the world, not India. And I think that's hotels and that's airlines. So, so betting on those is a pure tactical play. You buy a future options and you liquidate in the month or the day. But who the hell invests in those sectors? Nobody invests in the sectors, believe me. And because nobody made money in the sector, and nobody will make money in the sector. So, ignore those sectors. In my view, to investors have always been that unless you're really strong, like we recommended hotels as one big sector for the next year or so, because the revival would, give a beat up. But that's a 1 year call. It's not like a investment call. And, I love it when people call pharma old suspect. That industry is generating the maximum growth of any industry in this country. It's unbelievable, but we still call it old suspects because, I don't know, maybe it's kind of, we think they will just keep making money, or we think it's too old passe to talk about them. But that's one sector which is adding the maximum value to the economy and the safest sector to be. So if I were an aggressive bidder, I would say, yes, Pharma is definitely, you can call it old suspect, new suspect, whatever suspect. It's one of the places where you got to have a portfolio. And IT, what is the fault they have done? The top three companies, at least the top two companies, TCS and Infosys, have generated the best possible return for shareholders on any term perspective you put it. And they will keep generating. And you know what? The best part? They give the money back to shareholders. Look at the dividend and buyback. It's not an ITC story. It is not other story that they buy and all kind of do things with the money. They give it back to you. So I would put it in the bucket and says these are strong growth stories of India. And, you may call it suspects, but I think there's nothing to suspect about them. They will give you the returns.